A very good evening, everybody. Welcome to the live webinar on precious metals and focus, trading gold and silver amid 2026 volatility. I'm Ming Hui from Phillip Nova, and speaking to us tonight will be investment and trading strategist Mr. Wong Kon. Before I pass the time to him, I would like to inform everyone that if you have any questions throughout the course of the webinar, you can send them in via the question box, and we will get to them at the Q&A session towards the end. And now, without further ado, over to you, Kon Hao. Give us a few moments to set up properly. Yep, all good.
Yep. Yeah, so thank you, Min Hui, and thank you, Philip Nova, for having me tonight again. And of course, thank you all for tuning in. So today the topic will be on trading gold and silver amid 2026 volatility. And there's two dates that I want to take note of. One is on the 30th January this year, and the other will be 28th of Feb this year. So 28th of Feb, I think you know what happened. The Middle East tension once again erupted. Then on the 30th November, January, I think most of us may have forgotten, which is the important two dates because it determines the direction of the precious metal in the long term, and also what will be the short term and mid-term direction for the precious metal. So I think it'd be very helpful. Why is important to yourself, but it's also very important to me because I do have precious metals as investment tools or assets, and also use Philip Nova um, instrument as a trading product as well. So it's important to understand what is the long-term trend and the short-term opportunity as well. So I'm going to cover part by part. First, by give you a recap of the precious metal performance so far, and also the fundamental of precious metal direction, which is very important. Then I'll give you an outlook of the precious metal based on what happened on 30th January, where Donald Trump, President Trump, introduced or nominate Kevin Walsh as the next Fed chairman. I think I missed that out earlier, 30th January. Then, of course, 28 is another important day that will set the direction for, I believe, many years to come. So I will also cover about trading strategy, then followed by Q&A. So a little bit about myself for those that join me for the first time. So I'm an expert in quantamental analysis. Now, what is a quantamental analysis? Is combining both technical and fundamental analysis to chart out the direction for the market. So personally, I like to use technical analysis first, and I use it all the time, whether is it for investment or trading. That is to look out for opportunity to measure the risk. Then after that, if I find that there's a proposition that I would like to get into the market, then I will also have to include a fundamental analysis. Why? So when two combine to one, it aligns, that it gives me a greater confidence on why I think I should enter the market. So I think I missed out on the disclaimer slide. And based on this slide here, I just want to have a disclaimer here is that what presented here is based on my understanding. It's definitely for my own consumption, but if you would like to take action after this, please consult your licensed broker, who is Philip Nova. There's a team of very experienced licensed broker. Please consult them. So whatever we mentioned here is for educational purpose. It is not for recommendation. Now let's cover the first part about precious metal. And along the way, I think you can ask some question on the Q&A box. Min Hui over the other side will collate the question, and during the Q&A time, I hope to have some fruitful discussion between myself and yourself. Now let's discuss about the precious metal performance so far. And let's recap. The last webinar I have with Philip Nova in Singapore is on 8th of July 2025. So exactly 1 year ago. So what did we discuss back then, 8th of July last year? So I was pointing out to you this chart, and I freeze and of 8th of July last year. I want to take a look at it's still valid today. So then we discussed about, we could see that the gold was at 3,003. Of course, today is it hit a half 5,006. and silver back then was at 36 US dollars. That was July last year. So I point out to you that there's this behavior, which is gold and silver move in tandem together. But usually, my observation for the last few decades, the research that I've done over the last few decades, is that first, the gold usually will go up first, then followed by silver in different period. Yeah. So we saw that gold went up from the trough to the high. It went up 8.7 times. But when the silver ready to pick up, I also observed interesting phenomena here is that the silver, when it moved up during the same period, the trough to peak around the same period, it moved up much more, 32 times. So that was happening in the '08 crisis. We could see that gold went up 7.5 times from the trough to the peak. Subsequently, the silver also went up 12.4 times. So as of July last year, we discussed about so far at the point in time, gold went up by 3.4 times. Where later I'll explain what's the fundamental reason why I believe if you find that 5006 was the high, I think in time to come, I think we'll still break above 5006 and higher. I will explain to you why. So go back to July last year was at 3003. Then of course I believe that gold will still go up, but I also point out to you that let's look at silver because I think silver is about time to catch up. So what is today's market? So gold went up to a high of 5006, and then silver went up to a high of 121, about there. So if I go to measure the trough to the peak, the trough to the peak, we could see that the gold went up by 5.3 times and the silver went up by 10.4 times. But this time round, both precious metal, I think, is going to be over the long term perspective, is still going to move up in time to come. I'm not suggesting anytime soon. In time to come, based on my understanding in technical and fundamental, I believe that gold is going to break 5006. I do not know when, but we're going to discuss that later. And silver in time to come should also break the all-time high at 121. But my focus tonight is that for the time being, the next many months to come, I do not think it's going to break that soon. I will explain to you why. So I also want to take this opportunity to congrats CME, who is our sponsor tonight, that they have record-breaking volume for the micro E-mini index futures. So I do observe a trend here. I think the think tank over at CME Group are very intelligent because in 2019 they roll out this series of micro futures indices, 2019, which was and is still much needed because the other contract that they have is relatively huge. What I mean by huge, later I explain to you towards the end. They have brought something micro where retailer trader like yourself and myself as well. I'm a retail trader as well. Is especially useful because I can trade multiple lots. And I make an observation here is that when they launched 2020, of course, that was a record volume, and that's where COVID-19 happened. Then 2022, when you see there's a surge in volume, my observation is that in the derivative volume, when there's a surge in volume, it also means that these traders, usually traders that trade the futures, I believe that they are more sophisticated, which is myself and yourself. Okay, so during the time of volatility, we will like to hedge and trade into the volatility. So when volume pick up, it also means that that year or plus minus 1 or 2 years, that period will be of great volatility. So what happened to 2022 to me is a very significant year as well. I keep on mentioning about the year 2022. To me, I coin as is the beginning of an inflation years ahead. So 2022 June, US CPI inflation hit a high of 9%. And I do suspect it's the beginning of uncertain inflation, sticky inflation to come. And is all come together, and especially after 28th of February, when the Middle East tension erupted again. So 2025, what happened to 25-25? It was also a very volatile year. And what was the event? It was the start of the trade war. April, remember President Trump announced the trade war. That's coming to a year by now. And 2026 is a war, no, I won't use the word. It's a year of uncertainty with lots of geopolitical conflict. And I think it will cause a lot of stress to inflation once again. So I believe if I'm going to present to you in 2027, the whole year of 2026, the volume will be equal, if not higher, because futures traders, derivative traders will like to deploy all this instrument to hedge and to trade into the volatility. So later I'm going to explain to you how it works, where is the market heading, the precious metal especially, and how to manage the volatility and also its risk as well. So last slide for our sponsor, CME Group, is that because of I think if you recognize last year we shared in July the rise of silver. So indeed, it went up to a high of 121. That was, I think, between 30th January or 29th January or 30th January this year. It went up to 121. And then, but before that, CME also launched a 100-ounce contract. It's the smallest of its kind. Later, I'll give you a brief introduction about what is that. So is I wouldn't use the word small, but it's manageable quantum notional value. So the key feature is that you can control more with less input. That means you leave a smaller margin, but you can trade. To be exact, is every single 100-ounce silver is worth 9,000 US dollars, but you don't have to come in 9,000 US dollars. So we can go short as easy as you go long, where I think the current strategy in months to come for silver, exactly I'm doing that. In fact, now in Phillip Nova platform, I've been bidding on the way down and also offering on the way up as well. So what do I mean by that? I will share with you the trading strategy in a short while. And the rest you can read up yourself. I just want to go straight to the topic. So we spoke about the performance of the gold and silver in the year 2025, July onwards and until today. But let's look at the fundamental of the precious metal. Why am I so in love with precious metal since 2016? Yeah. But in 2022, that was a breakthrough year for me. So I started to acquire or gain an interest in precious metal in 2016. But of course, the wait is long, but it's all payoff. When 2022, when inflation hit a high of 29%, that's where we saw that the precious metals start to gain grounds. First, it started from gold, then silver last year pick up, then platinum. And I do suspect that copper will be next. But tonight, my topic, I think, I just want to zoom into perhaps just gold, and especially for silver. To me, there's a lot of trading opportunity in silver. Now, let's look at the fundamental of precious metal. Let's try to appreciate how how precious metal move is in relationship with US dollars. So in case you're not aware that gold is, to me, gold is a currency pair. Yeah, it's not just a precious metal, it's a currency pair against the US dollars. It means that, what I mean by currency pair is that when when I talk about dollar sing, it means that it's a currency pair. One side, if gain, dollar sing move up, it means that dollar is up, sing dollar is down. So when I say dollar sing is coming off, it means that US dollars is weaker and sing dollar is strengthening. So view gold as a currency pair. I think since 2016, when I have opportunity to deliver topic about precious metal in Southeast Asia, in Hong Kong as well, that I already start position the environment that look at gold as a currency pair. Is not just precious metal itself, but it is also a currency against the US dollars. Now let's look at this example here. When US dollars, I use the dollar index as a benchmark. Of course, you can use the dollar sing if you want, but let's look at the dollar index. When dollar is down during the same period, 201 to 2011, but let's look at the gold. It also during the same year to year, when dollar is down, gold went up. But there's an interesting phenomena here is this. When dollar was down 66%, gold went up by 652%. So it went up multiple folds. Now, let's look at this period again. 2017 to 2020, when dollar was down 20%, gold from 2017 to 2020, it was up 100%. And how about this recent years? Where was the high for US dollars? In 2022. That's why I say from the beginning, 2022 to me was a milestone year where the birth of high inflation to come. Okay, so yeah, the inflation is sticky. You heard about this, but I think is the inflation fear is absolutely not over yet. But yet, we have to recognize that. I think my whole idea when I invited to speak, I just want to prepare the environment. Where is the opportunity and how we can manage the risk? That's my position here. So 2022, that's where we saw that the US dollars peak and started to come off. But it was also the time that the gold started to move up tremendously, down 16% for dollar index, and gold went up by 247%. Okay, so but you can go equate. How about when US dollars up? I can tell you that based on this studies that when US dollars up, gold was down in the same magnitude. For example, is let's say gold is up 10%, or rather, when US dollar is up 10%, gold is down 10%. But when US dollar is down 20%, gold is up 100%, five folds. We can see that very clearly. So at this point, I think I just have to take it based on this study that we may agree that gold is a currency pair against the US dollars. When US dollar is down, gold should move up. Now let's look at this and let's try to understand the direction of the US dollars. In fact, before I start, I was asking if the participant could participate where I can ask you a question, you can reply on the chat box. But I think this service is not available on this platform. But let's say, for example, I ask you this question right now. Where will you think the direction of US dollars will be for the next 40 years? Is it going to go up or come down? Okay. My question to you here is this: where will be the direction of the US dollars be heading the next 40 years? So I reckon that most of us will say that likely the next 40 years is going to continue to sink downwards. Yeah, means that dollar sink today is about I would say today, but I didn't check the dollar sink today, but around this period is about 1.27, 1.28 around there. But maybe in years to come, it may be on par, 1:1. Yeah, which is not that far away. About many years ago, when I was a much younger, before I become a father, 20 plus year ago, dollar sing was about 1.8, but today's 1.27. It means that the dollars have weakened, Sing dollar has strengthened. Now, let's look at the next slide here. So is it true that the dollar is on the downtrend technically? I think I wouldn't want to describe about fundamental because the topic is not about the US dollars tonight, but yet it's related because we also understand, we study that gold, US dollars is a currency pair. So it's very also important to understand where is the direction of the US dollars. So if I look at a technical chart for the dollar index itself as a benchmark, I just put the significant peaks. You could see that it joined directly on the significant high, and all these are significant high, which the opening and closing. It is, to me, is on a downtrend. And on this 2022, that's where US CPI reached a high of 9%. We saw a bearish engulfing body, where in different tutorial I described about it at a point in time. So today we may feel that the dollar index did not go down a lot in percentage, but the gold has went up a lot. So at the point in time, I was trying to hedge my US dollars. I try not to have too much US dollar exposure, understanding this principle. But not to mention what are the fundamental. There are a lot of fundamental reasons why we believe that US dollar is heading down. But technically, that's what I'm seeing here. So how to manage the view that I believe that US dollar is going to come down. So that was in 2022, 2016. I started from there that I started to buy into the precious metal and trade the precious metal on more on a buy on dips strategy because of the understanding of the US dollars. And I believe most of you may have replied me that the next 40 years, the dollar is still on the downtrend. Yeah. So especially for Singaporean, or if you're Singapore earning Sing dollar, I think we should have more than agreed that dollar is on the downtrend because, of course, in this space in the financial world, they always talk about US dollar is very strong. But in my experience, being a Singaporean earning Sing dollars or receiving Sing dollar as a payment, our experience that Sing dollar has always been very strong. Dollar is always very weak. At least that's for us. I think the whole world. I just read a article from one of the reputable house. I can't remember is it J.P. Morgan, but it doesn't matter. He said that, which I totally agreed that so far in the whole world, the three countries that have never experienced, not quite experienced inflation or the inflation are much control is Singapore, Switzerland, and China, which is it is true. Yeah. So we may be complaining things are a bit higher, but outside these three countries, their prices, the cost of living is even much higher. Why? Because their currency may be on par with US dollars or maybe even weaker than US dollars. So can you imagine if dollar thing is moving downwards, what about other currency? So I would say that this is my view as of now. The next 40 years, I think the US dollar should be continue on this downtrend. So is dollar thing. And then the opportunity is in the precious metal. Just remember that general trend, I believe that the precious metal is still moving up. So therefore, I think since the beginning, I've been saying that I do not think that on the long term, that 5,006 is the high for gold and 121 US dollars is the high of the silver. But for the interim period, the mid to short term, I think there's a lot of play. The whole market will be range bound. Later, I'll explain to you why the whole market will be in range bound. So the next question to you, if you can have a chat box, but I think it's not enabled to you, but I can reply on your behalf. So what is the direction of the US dollars going forward the next few months? Okay, maybe this question a bit tougher than the first one. The next few months, what will be the direction of the US dollars? I can give you my answer. The next few months, I think the direction of the US dollars should be going up. Yeah, should be going up. And just tell you, I explained to you one strategy here is that in Phillip Nova platform is that of course I have some gold and silver position that of course if I'm long I make some money. So but when I make the profit will be in US dollars, right? So some of them I cash out is seated at the equity balance of US dollars. So I took that last few days to an opportunity when the dollar Sing went up to about 1.284 to do a conversion, a currency conversion to Sing dollars. Yeah, so that's what I did. Not all, but some of it, because if there's too much US dollars residing in my trading account, I will try to convert it with their currency conversion platform, which is pretty fine. Yeah, the spread is pretty fine. So the next few months in the US dollars, I think is going up. So along as it move up, I'll try to cash out more. That means convert more by US dollars profit, which is sitting either there to Sing dollars. Yeah, that's what I'm gonna do. Where I think it was continue to go up. Why? The question is that why I believe that next few months the US dollars is moving up. Very simple and very straightforward. Let me explain to you why. Um, I would explain to you why right now. Okay. Yeah. So I have this acronyms which is IIU and G. What is IIUG? Okay. IIUG means that I think inflation for the next few months is going up, which I'll explain to you why. Because of the 28th of Feb, there's a supply chain issue as of now. I think all this inflation number will take a while to kick in, about 1 or 2 months. Then I see that inflation is going up. Then, if inflation is higher, what will be the interest rate be? The interest rate may be higher. Now, when the interest rate is higher, which is II, right? II, inflation up, interest rate will be up. US interest rate will be up. When US interest rate is up, say for example, yep, so of course I know President Trump want to cut, but it really depends on the Fed chairman. Uh, the existing one I think will maintain, but the upcoming one is still a mystery. But we later on we'll go explore about his thoughts. Yeah, and then II inflation up, interest rate be up. When interest rates up, for US interest rates up, what would investor do when you find that the US interest rates up? Some investor will like to convert to US dollars and deposit in US dollars. So it means that they buy the US dollars because the US dollars is paying higher interest. So I'm able to get a higher interest payout in my US dollars account. So when inflation is up, interest rate should be up. When interest rate is up, US dollars should be up. Okay. When US dollars is up, then what will happen to the precious metal? It will under pressure because earlier we explained to you that gold, precious metal, and US dollars is a currency pair. Okay, have I lost you? If not, just remember these acronyms IIUG. Inflation up, interest rates up, interest rate up U stand for US dollars. US dollars up. Remember just now the currency pair we talked about gold and US dollars is a currency pair. When US dollars is up, it also represents that gold should be down. Okay, now let's move into the precious metal outlook right now. So I mentioned two dates. The first day is on the 30th Jan. What happened to 30th Jan is when Donald Trump, President Trump, nominated Kevin Walsh as the next Fed chairman. Okay, Fed chairman. So of course, President Trump wanted to cut interest rate, and it surprised the market because Kevin Walsh is very hawkish. Hawkish means that it have the tendency likely that he would like to hike interest rates. So it caught the market by surprise. Why did he nominate Kevin Walsh? Is he aware that he's possible a Fed chairman is going to hike interest rate, which is what not what President Trump like, right? So when the interest rate is hiked, it means that US dollars should be strengthening. When US dollars strengthen, therefore the gold and silver should be moving down. So this was exactly what happened to 30th Jan 2026. So now you have a better picture, right? Now let's explore about this man, Kevin Walsh. And I'm not too sure nominated doesn't mean that he will be in. I think likely he'll be replaced as Jerome Powell as the next Fed chairman. Jerome Powell last term or last day will be somewhere in May or in May this year. So May he will be, should be in as the next Fed chairman. But the upcoming FOMC meeting where he will decide the rate change, it will be June. So June is a very important month that all eyes will look at him. Kevin Walsh, what will be his decision? I think it's a very tough call because he also know that President Trump wanted to cut interest rate, but we also know that because of what's happening today, after 28th of Feb, I do not think that the inflation is coming down. I think inflation will be slightly to move up. It means quite obvious that the oil price already start to move up, the pump prices already start to move up. I'm not too sure about the canister gas price will move up, but I will know the next time if my cylinder dry. When dry, I call up my supply to top up my cylinder. Now let's study about what is the his view being hawkish. So Jerome Powell is a dovish, means that he would like to look at what happened to the situation. What I observe in Jerome Powell that over the years is that he take care of inflation, but he also want to take care of job and growth. So he like to balance between both. He's flexible to cut or increase interest rate. So that's what Jerome Powell is. That his strategy is let the economy breathe. Now, of course, when I present this slide, my youngest daughter say that, "Hey, Papa, this is from ChatGPT." I say, "Yeah, it's from ChatGPT. It's so useful," and I will strongly advocate that you use ChatGPT in your investment and trading journey because it's a first level. How I do is that first level. So when, of course, when Kevin Walsh name is being surfaced, all of us will have to understand. Yeah, I read about his being hawkish. So what do you mean by being hawkish as a central banker? So of course, ChatGPT suggests this to me. That's the first layer. I will have to qualify that. Okay, so I studied them through. I qualified it, and I think it's true. But Kevin Walsh is not dovish. He is hawkish. So what do you mean by hawkish? It means that he favor high interest rate. Why? Because his inflation, his view is inflation is the enemy. So he don't like inflation. Okay. So he support rate high or keeping rate high, and he do not like QT. He do not like money printing. So this is something that all of us market watcher would like to see how he managed this. And he prioritized price stability, which is the when I say price stability, it means inflation over growth. Okay, so it's different from Jerome Powell. So if you find that inflation start to pick up, he will likely hike interest rates. So therefore, we know that President Trump wanted Jerome Powell to cut interest rate So he may want to recommend someone that is will cut interest rate. But then when he nominated Kevin Walsh, he caught the market by surprise. So therefore, the gold and silver went down. It means that lightly hawkish. It means that will increase interest rate. Just do a recap here. US dollar should rise up, and therefore the precious metal should come down. So this is what happened to the 30th Jan during this period. Yeah. So let's move on. So let's look at the precious metal outlook. Then we're going to cover the trading strategy, then followed by some Q&A. I think we're doing good with time. We should have at least 10 minutes, if not 15 minutes for Q&A. But anyway, I want to move on very quickly to the precious metal outlook. So I posted this on the 4th of February 2016 this year in TradingView, where every week I will contribute ideas about trading strategy. That you should go and visit them. But later on, I'll give you my YouTube link as well. So I repurpose it on my YouTube channel as well. If you don't have a TradingView account, that's fine. It's free anyway. So you can always visit my YouTube channel as I post my thoughts on TradingView. I also repurpose it in my YouTube channel. Let's look at 4th of Feb was my view, and then the 28th Feb event has not happened yet. So my view back then was, of course, what we already knew was Kelvin Walsh likely to be the Fed chairman, and the silver reached 1-to-1 has kind of slammed off. So I suspect back then that I think the uh, bull market for the silver for the time being is over, and likely it will. That was just based on technical until 28th of Feb, where the Middle East tensions start to erupt again. Then I realized that this idea that the silver or gold start to do a range bound. What is the reason? Which I explained to you why. So then my idea was, after the bull run, the market likely to take a breather. So my idea was that silver is going to do a range bound where it's absolutely great for trading. Where now I'm positioned myself to trade the silver. So later I'm going to explain to you how it's going to work. And of course, I cash out some along the way as I bought around here, some in gold, especially in 2016, but silver I started to pick up much later. So I cash out along the way, but I still have quite a bit of position here. But what I intend to do is that as it moves down, as it range bound, I'm going to improve my price. So I explain to you how it works later here. Now today, where's silver here, and today is here. So indeed, it went through a period of range, and this is a weekly chart, by the way. Now let's look at in detail right now. So my view for the precious metal, especially for silver, I find that silver trading strategy, it will not be too stressful. I kind of chart out the direction where it will go. Why in this huge range, which I'll explain to you later on. Now, the external view is we view that US dollars in the long term is downtrend. That's what we're seeing here. External means that outside of US, we as a foreign investor, overseas investor, we view that US dollars is a long-term downtrend because of many factors, continuous deficit, there's a huge debt that's unable to clear, and the rise of China and rise of Asia as well, Southeast Asia. I think there's a lot of fund flows to this part of the world, and Singapore is one beneficiary. So all these cause a long-term decline in the US economy. That's what I felt, because it's always a balance of power, transition of power. So long-term, I'm seeing that US dollars should be under pressure. But in the mid to short term, because of the what happened to 28th of Feb, now we could see that the oil price is on the way up. Supply chain is disrupted. And by the way, Middle East do not just export on oil. Middle East also export a lot of spices, gas, and everything else. Okay, to 20%, as what we read, 20% to the rest of the world. And Singapore, we import 80% of our oil and gas from Middle East. Yeah, so a lot of disruption going to happen. So what will cause this after 28th of Feb, which is the Middle East tension, is that the mid to short to mid term is going to cause uncertainty. Inflation may pick up. So how long it's going to pick up, I do not know. It really depends on how prolonged this Middle East tension will be. So as a trader, as an investor, we do not make prediction of how long it will be, but we just have to move along with time. So for long term, to me, it's quite straightforward that long term, the US dollar is still going to continue to be on the downtrend. So therefore, my view for the precious metal over the long term is still moving up. But for mid to short term, there's an opposing force here. Yeah. So long term, I just want to let you know that why the market range, the silver range, because there's a tug of war. Tug of war means that there's a two opposing power in the precious metal view. It means that long term, we're seeing that the gold will still move up because gold is an inflation hedge assets, uncertainty hedge assets is still go up. But for the short to mid term, because of inflation, therefore the Fed chairman may raise interest rate. When the Fed chairman raises interest rate, it also means that US dollars may move up. But just like what we studied earlier, when US dollars move up, gold may come down. So isn't it a contradict here is that I'm seeing that the long term gold is moving up. So exactly that's why I say that because of this view that we just discussed, and my long term view for the gold is still moving up. So therefore, there's a tug of war. When there's tug of war, usually the market will become range. So I hope that you enjoy this uh, uh, explanation here, because how I look at market, not just in precious metal, in any other asset class and any other trading instrument here is that when there's no story, the story there's a opposing force story, it means that the whole market will range bound. Yeah, so range bound, it may not be bad. It's just that we have to position ourselves that we got to trade the market. Now, this is how it works here. Did the inflation move up? Yes, the inflation did move up. By the way, 3% is before 28th of Feb event. Yeah. So what usually we read is US CPI data. This is what published in the newspaper. But I can tell that what the Fed are looking at it even more closely is not just CPI, it's core PCE, the livelihood of individual, their expenses. It's called the personal consumption expenditure. That we could see that since the 90s to before pre-COVID, the inflation did for this PCE 1 to 2%. And why is it called as very sticky inflation? Because the inflation refused to come down to 2 to 1, 1 to 2%. You could see here, right? So the latest number, in fact, the inflation before the 28th Feb, the Middle East crisis, the inflation, in fact, is moving up. So the coming numbers or the next few numbers, because of the Middle East crisis that happened on 28th Feb, I suspect that this PCE may move up. So what will be the decision for Fed in June? Not just in June, but even after. Yeah, so I think we have to watch it very closely. So inflation really went up. So this is what we've discussed. Inflation move up, interest rate likely to move up, interest rate likely to move up, US dollars may appreciate. And when US dollars appreciate, then gold is a currency pair against US dollars likely to move down. So therefore, we're seeing a range bound because of the tug of war. My long-term view is that gold and silver is still up, but in the mid to short term, it seems like it's coming down. So therefore, what we're seeing here is that the market is range bound. So later I'm going to share with you how to trade this range. But let me just move on to the next slide here is called the contract specs. Before 100 ounce silver, but I'm still trading the micro silver, by the way. Okay, but I would like to explore the 100 ounce silver. So 100 ounce silver is even smaller than micro silver because then I can trade multiple lots. So how it works here is that every 1 cent movement represents $1. Means that if the silver price today is at $90 or 9,000 cents, you just shift out decimal. Since 1 cent is $1, 9,000 cents or $90 times 1, the whole contract value means that if I buy or sell at $90, it must worth something. It worth 9,000 dollars. So after 28th of Feb, of course, margin across the board all increase. If I got a base 1665, I check the Phillip Nova margin list as of 4th March is at 1665 divided by 9,000 because that's the full exposure. The margin requirement is about 18%, but this will be on the very high side because of the current uncertain event in Middle East, right? So 18%, but usually I think it's about 10, if not slightly lesser, about there. Means that 1 is to 10, but today is about 1 is to 5. Yeah. So margin requirement are subject to change based on market volatility and exchange policy. But if you look at, you want to be adventurous, this is a new contract, you can explore something that I like, which is micro silver. The contract value is worth 90,000, which is 10 times bigger than the 100-ounce futures. Of course, these are more for institution or very wealthy individual. Your one lot may cost exposures 900,000 US dollars, but this one will come with options as well for those who like to trade options. But I just want to move on. But at least we understand that when we trade 100-ounce futures, and especially great for range trading for retail trader. Now that's how it's going to work here. So my idea about trading for the gold and silver, especially for silver, we're going to concentrate more on silver for trading the range in this very wide range. Is this? Okay, I'm going to share with you here. Is that before I move on to the trading wide range, I just want to showcase you a little bit between gold and silver. I also managed to capture the silver play last year. Now, last year, what I did was somewhere in the middle of last year, I saw this gold silver spread or ratio. How do you equate this gold silver ratio spread? Of course, I do have to calculate that. It's available in the chart. So basically, at the point in time, is what 100. It means that that price then in gold was 3,059, and the price then in silver was 100. Yeah, but on this spread, I saw that it created an inverted hammer. Some of you may recognize that it's inverted hammer, but it was also resisted historically. So my view is that gold silver spread may come down. Okay, that was last year, June, July. That's why I make a presentation with Phillip Nova last year in July. That I believe that this spread will come down. When this spread come down, it means that in the context of precious metal continue to move up, it means that the whole idea about silver catching up much faster is going to kick in if the gold silver spread come down. So indeed, did it come down? It did come down. That's why we saw that from June, July last year, the silver from $35 went up 121 US dollars. Gold still move up, but the rate of change is not as robust as silver. But moving forward, what I see here is that, so this is just a demonstration here. That was last year, July. Silver is about 36, gold 3,003, and today we are here. So we could see that silver is moving up much faster. But today what I'm seeing here is that the spread has touched my target, which is about 40, based on historical support. Yeah, so it reached my target, and therefore I cashed out my silver some time ago, some before 30th Jan, some after. Yeah, so you kind of confirm that it touches support. I want to cash out, uh, buy other things. But in the same time, my plan is that I think long term, I still believe that precious metal will go up. But in the mid to short term, this silver is going to give me a very nice wide range. Now, where is the range? This is the range. So this is daily chart. 30th of January, that's where President Trump announced Kevin Walsh to be the next Fed chairman. Then after that, market is going to go through great volatility. Now, this chart appear from many occasions, including, for example, not related to this topic, but I want to recognize the chart here is that including Tesla. Tesla at one point, the first pick, after that, it went down, but it also went through a period of range before it started to pick up again. So I suspect that silver is going to go through this. Now, the whole idea about range view is that when there's no fresh news story, but I still believe that precious metal is going to move up. When there's a tug of war, there's both buyer and seller coming in with both opposing view, where the long term I'm still seeing that precious metal is going to go up, but mid to short term, many market watchers believe that the interest rate will move up, US dollars move up, therefore the precious metal should come down. There's two opposing strength coming in. There's a tug of war. When there's a tug of war, it also means that the price will be range bound. Until the tug of war between the buyer and seller meets with a fundamental news where I believe that it still move up. I do not know when, but maybe you continue to stay tuned with Philip Nova seminar or webinar when the time I will present my topic, when will be the time be. So I would like, my strategy here is that this is what we're seeing on the 3 hours chart, is that since it's going to develop a range where I believe that around 70, 60, yeah, I will be a very firm buyer in the silver market. Above 90, 100, 110, I'll be a firm seller in the precious metal market. So this is what my strategy is, was, and it is still is. Okay, so I've some standing order at 99, 104, 106. It's all standing order there. And after that, I also have a lot of standing order below about below 80. Yeah. So these are all the reversal point, as you could see. And this is what I'm going to do: buy. Just an example: sell. If I buy two, sell three means that I short one. Then I'm going to buy back three, sell back three. So this is what I'm going to do. But I would tend to I want to buy more than I sell, just to accumulate more profit along the timeline. If it continue to range bound, where I think that silver is going to continue range bound. So the play to me is quite not that stressful. Of course, it really depends on what kind of size you engage yourself in trading the silver market. So 100-ounce silver futures, to me, come in at the right time for my delivery. So therefore, I say that even myself, I used to trade the micro, but now I would like to explore into the 100-ounce as well. I've not touched it yet, but I will definitely explore into it. If not, if you have been trading the micro, just continue to do that. If I've not started at all, then you can consider the 100-ounce silver futures. Okay, so this is what Philip Nova would like me to shout out, that they have this new OCO feature. So it's helpful for traders, where you can get order, get in, at the same time you have a stop loss strategy. You can GTC, so it's very useful. Yeah, I learned that during my floor trading days. That was in the 90s, because then when in the beginning everything go electronic, hardly there's any OCO order, GTC order, but as time move, all these features are definitely necessary, and now it's available. Okay, so before I go to Q&A, you can connect with me through my YouTube channel. The YouTube channel, the name is Konhao, Konhw. But you can also go to my website, waypedia.com. You can go to the individual tab. There's some learning resources over there, so you can visit that. And of course, that's my email address, konhao@waypedia.com. So I definitely love to spark some ideas with you. But please do not ask me when to get in, when to get out. That one is supposed to be the duty and responsibility of a licensed broker. But I do like to spark some ideas. What do you think the general view of the market? Okay, especially what I've delivered tonight. If you find that blessed you and you have enriched you in how you see the market, please, I welcome an email. So I just like to pass this time back to Min Hui. I think we have next 10 minutes. We're right on time, that we can exchange some ideas together. Yeah, Min Hui.
Yep. Thanks, Conhao. We do have time for a couple of questions to everyone watching. Do take this chance to send in any questions you may have about the markets, and Conhao will be sure to share his insights and his views. We do have a question. Conhao, do you think increasing margin requirements for like futures contracts take away the benefit of leverage trading compared to investing in the physical market?
No, definitely not, because the physical market is spread. The spread is very wide. So if you want to trade the physical market, if you invest in the physical market, it's fine, because you buy the physical, you hold it, yeah. Then of course there's holding costs. There's a spread they have to pay, and I think the spread is about 3% spread. So 3% spread. If you talk about gold, gold today, let's say for example, is 5%. 3% spread means that you're paying about $150, just that spread. So of course, if you go to trade physical, I don't think it's a good idea, unless you say you're going to invest long term in the physical. So now, but when you come to trading, then it's a different story because most of the trading will have a margin. And of course, I think last year you may have read that CME or different exchange will always raise the margin. Now, this is not because, of course, that I heard there's some conspiracy theory that they raise margin to squeeze out other players. No, to me, let me just clarify. Now, first of all, I do not work for the exchange. Different exchange as well. So let me just speak a fair statement here is that increase of margin is necessary because it is part of the feature. Now, most of the leverage product, the margin could be 1 is to 10, 1 is to 5. Yeah, 1 is to 10 means that you pay down 10%, you can engage yourself with $100 product. Yeah, something like this. So now, for silver gold, why was there increase in margin in somewhere in December last year, or November, December, or even January? January, I don't think they increased. They should reduce, right? So because of the price, you have to understand that maybe in October last year, let's say for example, silver, it may be about 70, $80. But when it comes to January, December, it went up to 121. So the whole notional value, contract value has increased. So based on 10% of that notional value, contract value, so naturally that 10% of the whole quantum, it has to increase. So is proper and standard way that why the exchange have to raise margin. So is nothing conspiracy about all this. So I hope that I can clear. In fact, I think if about 10 to 15 or 20% margin of the whole total quantum is a fair because it protect the trader himself. That means that you need to have certain 1 is to 10 or 1 is to 5, say for example, before you trade a leverage product. I think it's a very fair protection, not to the exchange or not to the stockbroker like Philip or not to the futures broker like Philip Nova, but it's more a protection for the trader himself. Yeah. So I think I just have to make that clarify the air. Yeah. On not from the exchange perspective. Yeah. As an individual perspective. Thank you for the
Thank
question. I think
you.
it's great.
Thank you for your answer, Kan Hao. The next question is, what do you think would happen to gold prices in the next 3 months or so if the current or the new Fed keeps their rates unchanged?
Okay, let's maybe we take this time to I think I'm still keeping my uh, screen shared, right? Let's look at the goal. Since you asked me about question on goal, let's go look at the gold futures, and maybe we should look at the monthly chart here. So what I did was try to make a comparison between gold and crude oil back then. Let me just delete off this study. Okay, so earlier I did mention that the gold and silver, we spoke about the spread. And silver, I find is more interesting play here is that silver is going to create this huge range where I think gold will continue to move up is unchanged. Unchanged means that is good news for the precious metal is the interest rate unchanged. I think it's going to test the higher ground here, which is about 5,600. It may even break, but I do not think the magnitude of going up will be great. Yeah, for the gold. Why? Because I did mention that gold is going to be trendy when silver is going to be range bound. Why? Because market watchers are still looking out for June. That's where Kevin Walsh is going to make his decision in June for the first time. And I suspect that in June, right, the inflation should be picking up. And where's the inflation number, which is this inflation? We mentioned about PCE. It should be picking up because what happened to 28th of Feb in by June it should price in ready. Yeah, maybe about 3 point something. Yeah, not too sure. But if it happened that, and we also studied about Kevin Walsh is that he do not like inflation. So what will happen to the uh, uh, let me just go back to the goal, is that likely even if it break this 5,006, it should be resisted at 5,006. It break, I do not think it will go up much, because if it ever hike rate, it means that US dollars is moving up. So therefore, gold and silver will be having a lot of resistance. So I think from now to June, it should be resisted about 5,006. So I think long-term hold not that exciting. So therefore, I did mention earlier, I've been cashing out on some of my US dollars position because of gold and silver, and I'm buying to other assets. But I'm seriously looking to buy, to trade the range in the silver contract, which is this is what I'm trying to advocate here. Let's look at the 3 hours chart, uh, where I think we are going to see a lot of. Let me just clear this gray out part here for you. Anyway, yeah, it doesn't matter. So I don't want to take up too much of our time. So this uh, is this? No, let's look at the silver futures. Give me a moment. Yeah. So which is, I felt that the silver has much safety to play around with. In this, you could see that market is really range bound. You have to understand the psychology of range bound is that when the market range bound, it means that the market unsure of the big trend will be. So where exactly that's what happened to precious metal right now. Uh, in fact, is inflation hedge. Inflation will come, but why it's not moving up? Because uh, the oil is moving up. When oil moving up, inflation is moving up. Inflation is moving up. Interest rate should move up. Interest rate move up. We also study that US dollars should move up. When US dollars move up, then precious metal should come down. Okay, so there's a tug of war. So you're going to see a lot of this kind of trading opportunity. And where are the trading opportunity? These are the trading opportunity here. Whenever you see that there's a hammer, hammer like this, hammer like this could be a buying point. Of course, if you want to put a stop loss, please go ahead. But I tend to have this about 70-60 region. I like to buy a few, and I like to wait along. If nothing happened, I don't mind to hold it because my long-term view is still moving up. So I find that there's a lot of trading opportunity around here. So I hope that answered the question.
Thank you, Conhao. Let's take one last question because of the time constraint. So the question is, do you think oil will outperform gold during this period of geopolitical tensions?
I don't think percentage will outperform gold, but from I just did a I'm going to publish a video, by the way. This Sunday, you should receive this video. Title is Why is Gold Not Outperforming Crude Oil? Okay. Based on 28 Feb onwards. 28 Feb onward, you see that from this low point to here, the high point, of course, now it's coming off again, is 72. But you look at the silver and gold, 28 Feb, that's where the Middle East conflict started. Where did the gold heading? Down. Silver, down. Still staying under. Why? Is exactly our topic here tonight. Inflation pick up, yeah, IIUG, inflation pickup, interest rate likely to pick up. So we are anticipating, we're pricing we're pricing it now. Okay, we're pricing it this outlook. IIUG means that inflation up, interest rate up, U stand for US dollars up, US dollars up, inverse relationship, precious metal down. But yet we are seeing that the precious metal over the long term is still going to move up because it is an inflation hedge. Therefore, based on this logic, the whole precious metal, especially for silver, I'm not too sure about gold, but gold will be resisted. Silver is going to have this very nice play of range bound and select your contract correctly. I will advocate the 100 ounce futures. Fun. I think it's going to be fun for me at least. But of course, it's relative. 9,000 US dollars at $90, it really depends on individual. What is the net worth that you have? I think $9,000 per entry is going to be fun to me. I hope it's fun to you. If not, then you can always consider the micro. So I hope that I think this is a great question for me to help you to sum up the whole point for tonight webinar. So I hope they have a blessed time and you have learned a great deal, and of course, more importantly, have a clarity of how to manage uh, the opportunity that's coming right up. So thank you, Min Hui, and thank you, Philip Nova, and all for tuning in.
Yep. Thank you very much, Konhao. As mentioned, due to the time constraint, we will end our Q&A here, but not to worry, we will get back to the outstanding questions via email after the session. So thank you very much for the insightful session again, Konhao. With that, we have come to the end of the webinar. Thank you everyone for your time tuning into this webinar tonight. Feel free to send in even more questions after the session via the survey that will be popping up after the session, and we will get back to you as soon as we can. We'll also be sending everyone a link to today's webinar recording so you can watch it again if you would like to. And that's all for today. Thank you and have a good night, everyone.
Thank you.